Hi, my name's Matt Palin, and I'm from the New York area. I received funding on July 27th, 2021, and I completed the evaluation in about 3 days. I did the $150,000 account because I felt it best fit my needs for leverage and for the trailing drawdown. I would characterize my trading approach as mean reverting and contrarian. I tend to look for areas of major support and resistance, and I try to only trade when there's momentum. So I try to keep my trading activity to the first 2 to 2.5 hours of trading. Prior to using OneUp I did try another program. I did try Top Step Trader in 2020. Working from home, had more time to trade at the markets and look at them. It was something I'd always been interested in. I went through the Top Step Trader evaluation. From what I recall, though, that the evaluation rules or targets are a little too strict. And I looked into OneUp and saw that for similar prices, the evaluation accounts give you access to more leverage, give you access to more capital, and the trailing drawdown is a bit looser, which is helpful, at least in terms of passing the evaluation. I'd say my experience with the OneUp evaluation support has been overall good. The online chat is helpful in that there's somebody available very quickly. I've only ever had to wait maybe like 20 seconds for somebody to respond to my message, and I've never had any major issues working with the support. Passing the evaluation account, I've done it multiple times. On average, I think it takes me three to 5 days to hit the profit target for my style of trading, and for the onboarding, that usually takes another, I guess, maybe 3 days on average from what I can recall. There's you get some emails from OneUp saying, you passed, these are the next steps, and then there are certain documents that you have to sign. Sure, I guess at the beginning of the trading day, I prepare some breakfast, but I sit down at my computer, usually at least a half hour before the market opens. I prefer to sleep in at least as much as possible. I am considering trying to wake up a bit earlier to trade the bond open, which is at 8:30 Eastern, because I primarily trade equity index futures, but I do time to time also trade bond futures, and I think that being available for the open would be good. But in terms of preparation, I'm just looking at the overnight major support and resistance levels. I also take a look at the volume profile for the recent history. This is, I guess, a common philosophy or trading approach is volume profile. So I try to look at that. I also look at some other, I guess, contrarian or mean reversion type indicators, and just at least try to not enter a position until those things all line up on multiple time frames. Yeah, absolutely. You need to have some buffer in your account because you will experience drawdown. So, looking to your trading account as a regular paycheck is not the right mentality. For me personally, I want to grow the account to a significant size first before I consider, withdrawing from it. Thankfully, I do have, full-time job that I can rely on, at least until I get to that point. But if and when my trading reaches a point where I'm making very consistent gains with minimal drawdown, I would feel more comfortable withdrawing from it, maybe on a weekly or bi-weekly basis, but I'm not at that point yet. I think it has. Early on in my trading, at least in 2020, the market recovered and was on a very strong rally for a long time. And so it was very, very easy to buy the dip. And that may still be true, but there'll be like one day out of every 2 weeks where there'll be a significant sell-off in the morning, and that was something I was vulnerable to. So I am a lot more careful about that kind of scenario. So rather than having a very strong long bias, I at least try to try to wait for more of uh, a zone of price levels to be established before I have a much stronger conviction in my trading. I definitely would if people are interested in becoming a trader, an independent retail trader. I think that OneUp Trader is very helpful because it enforces you to learn risk management. I mean, if you're trading your own personal account, you can get lucky for a while, not knowing anything. You could average down, you could hold forever. A market has a bias towards the long side and going up. At least it has for a while, and so you may feel that you have some sort of secret if you're just lucky. Um, but if you're over leveraging your personal account, you could wipe out savings that have taken you 6 months or a year to acquire, or even longer than that, and that's a significant amount of risk for most people. So, OneUp Trader, you're not risking your own money. The evaluation is teaching you good habits and giving you time to refine a strategy. And for the monthly cost, it's certainly a lot cheaper than blowing up your own personal account. Yeah, absolutely. In terms of advice, there was an older gentleman who gave a similar interview months ago. I remember watching, and the transition from the evaluation to the funding, you do have to make sure that you've practiced the scaling correctly, because in the evaluation, you can add into a position a lot more aggressively, and that can change your average entry price and make things easier to pass the evaluation. But when you're actually in the funded account, at least starting off, you're gonna have access to a lot fewer lots for your trading, so you can't rely on that. So you have to be smarter with your entries once you move into the funding account, because you're going to be starting with smaller size. So I think that's a big one. Also, this hasn't really been an issue for me because I keep track of the market calendar. But yeah, I mean, just keep an eye on that, because it's going to be not a good feeling if you did all this work, you spent all this time, you pass the evaluation, and then your funded account gets closed because you were trading a Fed announcement or something like that. So don't let that happen. It's not worth it. There's going to be plenty of other opportunities in the day for you to trade. You may not feel that way, but trying to trade the news is essentially coin flip, at least to me. You may feel differently. You may have a news driven strategy, but for me, that doesn't work.